have with me FHA expert, among other things, broker, loan officer extraordinaire, owner of Advantage Lending in Rochester, Michigan, Dan Litvin. How's it going?
Great, thanks for having me.
So psyched you're here because there's a lot going on in the FHA world, isn't there?
Oh yeah, a lot of new changes.
Right. So I wanted to get you on the show and basically answer this question. Some people were asking me, actually just last week, what is going on with the FHA loans, the world, things like that, and I had done a video about FHA versus conventional. So what is going on with FHA right now?
Sure, well, a lot of changes going on. One of the biggest changes that affects everybody as a whole with the FHA is the new FHA loan limits. So if you're here locally in our area, Oakland, Macomb, Wayne County, the new loan limit for FHA has been raised to $294,515. That is a huge increase and should really help people that were at the previous loan limit of the $274-ish be able to buy about $20,000 more worth of house than what they could have before with the FHA. So it really opens up the parameters to people being able to get more of a house. Prices have gone up on homes, so it's really only fair that the limits have gone up too. As you know, of course, prices up, right? So that's one of the biggest changes right there.
Oh, very cool. Okay. Anything else going on in the FHA world?
Yeah, there's a few other things. One of the other things I'd like to go over really quick is student loan debt. It used to be with an FHA loan that your student loan debt, if it was deferred, it didn't count against you for your debt to income ratio, meaning how much money you have going in versus how much money you have going out, and basically your ability to get the loan. So previously, if somebody had, we'll take an average number, say $25,000 in student loan debt, right? Pretty common. If it was deferred because the person was in school still or they were getting their master's degree, that debt didn't count against them at all. So they could have $25,000 worth of debt, even though it showed up on the credit report. If it was deferred, we left it as zero. Well, that changed because the reality is everyone knows that one day you're going to have to pay that debt.
Absolutely.
And so what they've done now is they've basically made it so that we have to use one of two things on the credit report. One, if the credit report states that there's a payment, even if it's in deferment, we can use that payment. And that payment is often less than 1% of the overall balance. But if there is a zero payment and there's still that balance, we have to use 1%.
Wow.
So for example, if there's a $25,000 student loan showing up when we pull the credit report, we have to use $250 a month against that person's income and list it as a debt, which basically, that's the equivalent of some people's car payments. So that will bring down the amount of money that somebody could qualify for.
Right.
Alternatively, if that same $25,000 student loan debt has a monthly payment associated with it on the credit report of $100 a month, we can use that. So we can use the $100 a month, even though it's less than 1%. It's not for sure. It depends on how it's reported on the credit report.
Okay.
So,
but if it's deferred, then you use the 1%.
It could still be deferred and actually even show the $100 a month payment.
Right.
So we use whichever is less of the two, 1% or whatever shows up on the credit report.
I don't think a lot of buyers know about that rule. I mean,
no,
that's huge.
It changed this year.
Yeah, as you know, there's a lot of buyers that are tight with their money, and especially a first-time buyer, they may not be thinking that. And if they don't work with somebody that knows about these updates, then that can ultimately hurt them.
It's very common when we start getting someone qualified, if we do go down the path of FHA, and we get into the student loans, and all of their loans are deferred because the person's going after their master's or doctoral degree, that they're not even thinking about the payments. Right. But the reality is we have to think about their payments.
They're there.
It's part of their liabilities.
Well, good to know.
Yep, exactly.
So anything else you got? I know there's a lot.
Yep. Another common thing with FHA is the safety and livability factors. A lot of people, whenever people talk about FHA, a lot of times from a buyer's perspective, they're wondering, well, I've heard that there's a separate FHA inspection. I've heard it's really tough. It's really not tough. It's really not that bad, and it's not a separate inspection, contrary to what a lot of people think. The second inspection, not the second inspection, but the FHA inspection is really part of the FHA appraisal process. And all that really happens is you have appraisers that either are or are not certified to do FHA loans. And when they go out and do the inspection on the house for an FHA purchase, what happens is they have to follow HUD's minimum property standards for safety and livability. Okay, and it basically comes down to there can't be any broken glass, no curling shingles, the heat has to work, electricity has to turn on, there has to be GFIs around water sources, has to be handrails going down the stairs. You know, you have to have hand railings on your decks if they're above a certain height. Basically things that would make the house unsafe or unlivable. So that's something that's pretty big with FHA, and
It's huge.
It's really not as bad as what you think. And even when we get those in, and let's just say it comes back and the HUD does not meet HUD's minimum property standards, what does that mean? Well, let's just say, for example, the person to get some furniture down in the basement took off their hand railing. It's as simple as putting the hand railing back on, having the appraiser come back out who did the job the first time, snap a couple photos, and do a completion report that the hand railing's been added, and basically now the house does meet HUD's minimum property standards, and we're good to go. So it's a pretty simple process.
Do they usually charge a fee to go back out for like a reinspect?
Awesome point, they do. On average, it's between $150 to $175 for a reinspection, which is
not as bad as the full one.
not as bad as the full appraisal. Yeah, common appraisals for FHA are somewhere between mid 400s to upper 500s, depending upon the lender and the appraisal management company, or AMC, depending upon which one it ends up getting sent to. Yep.
Okay.
So one other last thing I would like to go over is
absolutely.
condos.
Oh yeah,
Condos and FHA. Now, see, that's a common reaction, okay? But you know, when you're looking at them, you can get yourself in some hot water with the FHA condos. But when you're working with a professional like yourself, and you know where to go, you know what to look for. It's not a big deal. Really, what it is, and I know you do this on every transaction whenever you're looking at it. You got to go to FHA Condos Lookup,
and which we'll put that link below in the comments.
Yeah, and it's. You can't necessarily trust the information that's out there on the MLS 100% of the time. A lot of times there's the perception that it's FHA, maybe because the person who bought in there, who's selling it now, maybe they got an FHA loan. And they figured, well, I got an FHA loan, sure. But what happens is those FHA approvals expire. And typically they're good for about 2 years. And what happens is when it expires, the homeowners association has to renew or recertify that condo development. And if it's not renewed or recertified, you cannot get an FHA loan in that development. So it's really important, go to FHA Condo Lookup, make sure that if you are using an FHA loan and you want to buy an attached condo, that you check it out. Jason will check it out for you for sure.
Absolutely.
And you know, just look at the expiration date. And you got to make sure we close by the expiration date. Just an FYI, if someone were to recertify an expired FHA condo approval, it's a 1 month process after they receive the application package.
So make sure.
And that's if you don't go past 6 months past the expiration. You go 6 months past the expiration, you got to do a full approval application again, and it takes considerably longer.
And you know, see, we were just talking about too how there was a common mistake made by the other agent on one of your deals where they thought the condo association was FHA approved, but the name was off a little bit, right?
It was off.
It was so small.
It was. Yeah, I'll mention it here. So what it was there was a condominium development in Shelby Township called Windmill Pond condominiums. And basically, the listing ticket said it's FHA approved, and you know what happened is the developer created a whole second development of Windmill Pond, and it was not phase 2; it was its own separate development. And so basically, what ended up happening is they had 2 completely separate master deeds, and besides the fact that these 2 subdivisions connected with the same streets and were built by the same builder, because they had 2 separate master deeds. They also had 2 completely separate HOA associations, 2 completely separate budgets, and basically they were in effect completely isolated from one another. And they would just happen to be called Windmill Pond 2. So it was not that Windmill Pond, it wasn't the second phase, it was a completely separate development with a very, very similar name.
So you want to make sure those things, that's why it's very important, you know, I stress this all the time in all my videos and all my meetings that I meet with buyers and everybody, is that, you know, work with experts that look at this stuff. There's so much more behind the scenes stuff that, you know, people don't even know. I've seen mistakes on the MLS often. I mean, there's just not enough research being done by most agents, unfortunately. So it's always important to work with somebody who knows what they're doing. So that's why I have you on here.
And that's why I like working with you as well. I
absolutely.
mean, I think together it works out very well.
Yeah, I mean,
we're up to date.
Dan's gotten deals done, for me. So it's just you want to work with people who know what they're doing, who study what they do, and not just get up and say, okay, I'm a loan officer. It's very important to work with people who are experts. So anything else you want to share before we wrap it up?
No, that's it. Thanks for having me. I really appreciate it. And I'm glad we could get this information out to the people, and hopefully it helps put some deals together.
Awesome. Thanks again, Dan. I'm going to hit Dan's info at the end of this video. So reach out to him if you are even thinking of buying a home or a condo. So thanks again, Dan. Appreciate it.
Yep.